Welcome, David. For the benefit of new viewers, can you tell us a little about yourself?
Hello, I'm David Morgan, and it's great to be with you. I am the publisher and founder of The Morgan Report. You can find my website at themorganreport.com.
What's your current view on the general markets?
Let me just say that the general markets are something to be a little leery of because all markets move up and down, and what we've seen in the general equity markets across the board globally is uncertainty. This is reflected in the sell-offs we've seen in China, the United States, and basically all the emerging markets. But this is starting to get into the consciousness of the average investor, and is starting to question whether or not these markets are as robust as they might have thought even 6 months ago. This also triggers the thinking about the safe haven asset, gold. Gold is the most negatively correlated asset to the general equity markets, again across the board. So if you're in China, if you're in India, if you're in London, the United States, it really doesn't matter. Gold, not gold stocks, is the one safe haven asset that protects or goes opposite of the general equity markets. So you're starting to see some of the smart money move into the gold sector. Does that mean we're in a new bull market in gold or silver? The answer is no, not yet. What it does mean is the smart money is starting to shift from equities into gold, and I think that trend will continue this year and accelerate in further years out, primarily 2016, 17, and 18.
So where do you see the increased demand for gold reflected?
I think this year, 2016, we'll probably see gold get into maybe the 1,300 level or so, silver maybe into the 20s. I don't expect a really significant move in the metals, but I must give the caveat, barring some significant financial upheaval, some oil surprise, or some geopolitical event. These are hedges. Gold and silver are the hedge. So if something were to manifest as an anomaly or something not expected by the marketplace, certainly it would react significantly. And as an example, if something were to occur, you might see a huge run in the metals for a very short duration. So if you're a swing trader or you're very savvy about these markets and that were to occur, you might take some quick profits and retain your overall hedge position.
What's your assessment of recent events in China, and what's your outlook going forward?
Well, having been to China and seeing how fast it grew, to me, my thinking was it's a little bit too much too soon. A lot of negative presses about China. The political shift is more negative, in my opinion, than it was, let's say, under the other leadership that was basically a mining guy. But there's a lot to any rapid growth situation, and because of that, I think you're going to have to see things settle out. Right now, a lot of money is leaving China. There's a lot of uncertainty and a lot of fear. Again, I think that this is something that over time will kind of subside, but right now, the markets in general, and not just China, are jittery, and for valid reasons. Most of the equity markets are overvalued.
The U.S. economy appears to be doing quite well. Do you think this is sustainable, in your opinion?
The U.S. economy is basically a propaganda machine in my very studied view. Certainly, the United States is one of the most stable places on the planet, there's no doubt about it. The dollar has shown great strength over the last several months, yet the reality is it's the best of the worst, meaning that the real true physical economy is nowhere close to what the stock market would show you as the physical economy. In other words, there's a divergence between reality and fantasy. The stock markets are in fantasy land. The physical economy really hasn't recovered significantly since 2008.
Are market puts a good idea?
Yeah, I would absolutely be short the market here.
What about Europe?
This idea that different cultures could combine under one currency without a substantial bond market that represents all countries combined, it's a bad idea, and the market's manifesting that reality to all participants.